Single mum Tara Higginson is worried about interest rates rising. During the pandemic, she borrowed about $500,000 to build her dream home, which is more than 6 times her income.
I either need to find a second source of income or, it's something I'm really scared to actually think about.
Tara took out an interest-only variable loan, so without the extra income, she could be forced to give up her home.
And then you need to do your 4 times tables. I'm 100% at risk of having to sell the property, and that would, kill me to say goodbye to it.
Miss Higginson isn't alone in facing the prospect of financial stress. Out of 1 million new home loans written over the past 2 years, about 280,000 Australians have borrowed 6 or more times their income and/or put down a deposit of less than 10%. Economist Angela Jackson says if unemployment rises, many Australians could default on their loans.
The Reserve Bank itself has said that, if interest rates do go up by 2%, which is what we the scenario we're looking at, the number of people in what we call mortgage stress will increase from around 10% to 20%.
That could spark a housing sell-off. Property prices are already losing steam. They rose just 0.6% in April, which is the lowest reading since October 2020. Most cities and the regions recorded gains above 1%, but values in Sydney and Hobart fell, while they were flat in Melbourne. Economists say the housing market will further cool as interest rates rise. The Reserve Bank is expected to deliver consecutive hikes, possibly starting as soon as tomorrow. That's raised questions about whether the banking watchdog APRA could have acted sooner to prevent lenders from handing out big loans.
Perhaps that thinking was a bit slow, and that's going to lead to a number of borrowers potentially more than we would have hoped in a really difficult position when interest rates do eventually rise.
Former APRA staffer Wilson Tsai says the regulator does not act with the consumer in mind. Its remit is to ensure the banks are stable.
Because they are more like a trade association, if you like. They're not seeking not really in a sense to punish institutions.
He says APRA's failure to restrict lending to vulnerable people to buy housing could be the very thing that threatens the financial system.
Property price reversal or any economic unexpected volatility will definitely cause a lot of stress for the households, and possibly if they are forced to default on payment and so on, it could have repercussion for the lenders, the banks themselves.
Hey Sam, Sarah, how are you doing?
Hi, well.
Consumer groups are also worried that as rates rise, more borrowers will struggle to make repayments.
I think that organisations like mine will receive more and more calls from people in financial stress. People are entitled to hardship arrangements, other sorts of assistance, moratoriums if they are having difficulty.
Miss Higginson wishes she had taken more time to consider the amount of debt she took on.
I was just so swept up in being approved that I was like, this is a dream come true. Just roll with it and keep going and think about the consequences later, which now I've now I'm in here, I have to look at how things are going to change and what the future holds.
Her advice to others looking to buy a home is make sure that they plan for rising repayments.
Owning a house is the Australian dream. It's what everyone wants. But make sure that the banks can't take it away.
Like many other Australians, she'll now be working even harder to hold on to that dream.